Robinhood shares jumped 13% after job cuts. Smaller than feared loss. What's going on is Anton from AntonDaniels.com. I appreciate you guys for continuing to rock with me. You know I'm always going to bring you the news. And I want to bring you the most relevant news because I want you to pay attention to what's happening. And it's important because you guys truly don't understand how small businesses, the middle class, you guys, me to a larger extent, once upon a time, were the ones that were bearing the brunt of what happened when these companies, when earnings, when cuts need to be made, when things happen in the industry. You're the first to go. Nobody cares about poor people. Middle class bears the brunt, and the upper class are the ones that benefit the most. Let me break this down for you, okay? So, shares of Robinhood markets rose more than 13% on Wednesday, a day after the commission-free brokerage announced job cuts and posted smaller than expected quarterly loss in an earnings announcement that came a day earlier than scheduled. One of the things that people regularly ask me is, Anton, I have a Robinhood account. Should I upgrade to a more established brokerage? And I say, absolutely. Robinhood is largely for people that are getting their feet wet and trying to understand exactly how they need to move in the market. More established brokerage firms offer the same thing, but additional options for you to be able to do different things, speak with advisors, make informed decisions, open Roth 401ks, or not Roth 401ks, but Roth IRAs, things like that, right? But what happens is these platforms were largely for, or the people that embrace the platforms like Robinhood were they were using these platforms to gamble, if we just want to be frank, right? They were going into meme stocks, and a lot of people lost their shirt and things like that. But I wouldn't say that Robinhood is a fly-by-night application, but I will say that if you want a big boy brokerage or a bank to be able to do things, I think that you should go with a Fidelity, a Charles Schwab, and things like that. But that's not the point of this particular article, okay? So in the earnings report, it says in Menlo, California, or Menlo Park, California-based company saw revenue fall 44%. In the second quarter ended June 30th, if trading volumes eased from last year's frenetic pace when retail investors used its application to pump money into so-called meme stocks. Gambling, ladies and gentlemen. Nothing more than gambling is what you were experiencing for an extended period of time, especially during the pandemic when nobody had anything to do. And they were pumping money into things, hoping to get rich and then possibly make enough money to pay off their student loans, when in reality, a lot of people got caught slipping and a lot of people lost a lot of money. But it was easy to move in an application because technology makes things easier, whereas a lot of the different brokerage firms over the years, and what I've been paying attention to is, when I was coming up back in the 2000s, you had to pay a fee for every trade you made. Now, the fee was nominal, and before that, you had to actually, basically hire somebody to be able to execute the trades for you. But now that we had technology and we moved online, you had to pay a small fee. I believe I was paying like $12 with E-Trade when E-Trade first came online. And then eventually it moved all the way to the Robinhood way, in which they basically were saying no fees, you don't have to do anything. And so people were asking, well, how do they make money? Let's deep dive, because Robinhood is actually losing money. However, investors cheered Robinhood's move to reduce expenses via another round of layoffs, meaning that they're going to cut costs when things are not going well. And you know what people do? They do this. Investors cheered. Investors cheered. They don't care anything about you. And listen, I'm not saying they as though the company. I'm telling you that they have an obligation to the people that own the company, which is the shareholders. The same way that if you are a business owner and you losing money and you need to cut staff because you're overstaffed, then you have to make adjustments so that you can affect your bottom line and you're not spending so much money because you don't have the staff, or you're overstaffed and you don't have the capacity financially to be able to support that. You got to cut costs somewhere. And so investors was like, yo, Robinhood is going to make more money as a result of laying people off, and we're going to cheer that decision. Another round of layoffs, which cut its head count almost a quarter, 23%, on top of the 9% full-time staff laid off earlier this year. So they just cutting costs. Most of these companies that we see across the board, Tesla, Coinbase, Netflix, Robinhood. I talk about Ford Motor Company, and GM is making sure they keep open the option. Almost every single industry and every single company at the top, especially with middle managers and the people that are solidly middle class that you identify yourself as you are getting your heads chopped off. The company also said it would change its organizational structure to drive greater cost discipline, meaning that they're going to make sure that they only put people in a position that they have to, and they're going to extend the amount of work to less people to make sure that they stay sufficient. And they give you, the investor, whoever is invested in this company, because I'm not invested in Robinhood, full disclosure, that they give you the most value for your money. The company posted a net loss of $295 million. A lot of these companies, the Ubers, the Robinhoods, a lot of these different companies are not profitable. They have not been profitable. And they're trying to build a business model that allows for them to be profitable, basically monetize what they're doing. A lot of people ask, well, if they're not charging for trades, how are they making money? We'll get into that in a second. Company posted net loss of $295 million for the second quarter, stripping out restructuring charges. It made a loss of 32 cents a share. How can you make a loss? Versus analyst estimates of a loss of 37 cents per share. Analysts welcome Robinhood's bid to get its expenses under control, suggesting the move could be positive for the company's flailing stock. We believe cost reductions will likely drive the company to profitability in the near term and drive shares higher. So they're hoping that when they drive cost out and they fix their business model, they're going to then make money. Fintech stocks, including Robinhood, bore the brunt of a broader market decline as a risk-off environment. Basically, people less likely to gamble and take more risk in these meme stocks and the companies like Robinhood and things like that, coupled with higher funding costs and sluggish economy growth or e-commerce growth, led traders to pull back from high growth tech shares so far this year. Robinhood, shares of Robinhood, which were sold at $38 a share in its initial public offering last year, have shed more than 70% since the company's debut on NASDAQ. In common, other high-growth tech firms, Robinhood has yet to turn a profit since its market debut. Every single quarter since it had its IPO, initial public offering, Robinhood has been a losing company. It has been losing money. It has been bleeding money. And what it's doing is it's continuing to raise money via debt, which raising money becomes much more expensive. But then also on top of that, they issue more shares, which makes or it dilutes the amount of shares or amount per share when a user goes to buy into a stock. Although some analysts took Tuesday's announcement as a positive sign that the company is on an upward trajectory. They're hoping that one day they're making money, so they're going to invest in them. We believe that once the market digests the shock from the layoff's sheer size, investors will focus to fundamentals and the path to profitability. Robinhood is one of the many fintech upstarts that have started slashing jobs ahead of the expected recession, along with crypto exchange Coinbase, buy now, pay later Klarna, and NFT platform OpenSea. So, what am I telling you? I'm telling you that nobody cares about you. It is a dog-eat-dog world. If you're waiting on somebody to come and save you, they're going to give you just enough to be able to feed yourself, but that don't mean that you're not going to go homeless if you're not doing the right thing. Living paycheck to paycheck. If you are not the person that's on the other side and the investor side and you out here gambling, you're not making informed decisions, you are going to find yourself on the outside looking in, and it's not going to be pretty. It's not going to be a beautiful situation for the middle class that is largely having all of these meme stocks and the ability to be able to trade real fast and quick without making informed decisions. Y'all need to join the Patreon, real talk. In the Patreon specifically, we go through and we have different threads within the Discord that highlights how you're supposed to move when it comes to looking for companies to invest in. More importantly, I have budgeting videos in there if you're just getting started. I have 8 things that I look for when I'm looking to invest in a company. We got mastermind sessions, build a business. We got a community of people that's having these discussions on a regular basis. We get to the money in the Patreon. Make sure you join. Link is in the description as well as pinned to the top of the chat. I love you. I appreciate you, but I'm trying to add the most value into your life, and you need to be making informed decisions. Okay? If you need to kick it with me personally, email me at antondaniels413@gmail.com, and we're going to get it popping. Make informed decisions, do the right thing, stop getting caught with your pants down. That's the name of the game. I need you to do me one more favor before we get up out of here. Make sure you share this with your family and friends. We don't want to be rich by ourselves. It's more important than ever for us to make informed decisions now. So you not greeting at Walmart when I'm pulling up in my Porsche when you're 70 years old trying to get back into the job market. I love you. I appreciate you. Let's stay focused. I'm going to talk to you later. Peace.